Well, hello there. My name is John Sluice with Entrust CPA. We're continuing the series on the One Big Beautiful Bill Act, or OBBBA, and we're breaking that down into small snippets of various different things that may impact you for this year. Today's session is about the SALT, or the state and local tax deduction. So stepping back, if you remember and recall back in 2018 when Trump, they significantly simplified the tax code. Well, how they simplified it for many U.S. taxpaying individuals is that they increased the standard deduction. Part of calculating your taxes, for your income taxes, at least in the United States, is they just assume that you have various different expenses. And they just give you the benefit of the doubt. You don't have to add everything up if you want to. Many of you have heard my example here where you can think of it as like either one big gigantic boulder or multiple little rocks. If you add up all the rocks and they become a larger pile than the one boulder, then you're going to take those. But if the one big boulder or the standard deduction is larger, you get to take that. Well, for most Americans now, because they've increased that standard deduction so high, most Americans are taking that standard deduction. What we're talking about is inside of these itemized deductions that are there. One of the trade-offs for making the standard deduction bigger is they limited the amount that an itemized deductions that you can have specifically related to deducting state and local taxes. Who got hurt by this is fundamentally high net worth individuals that were particularly in high tax paying states, California, New York, areas like that. And so during this most recent tax law change here for the OBBBA, there was a lot of trading back and forth, and this is one area where they actually increased this this phase out, or this deduction. So prior to this, you were able to deduct if you itemized up to $10,000 worth of taxes. So if you paid $60,000 in state taxes, well, all you could take the value of it was $10,000. It phased it out. Now they've increased it up to $40,000. So again, if you pay state and local income taxes or property taxes or license plate tabs, why do we ask for those as your accountants? Well, it's technically a tax. It's a property tax. It's a personal property tax. So we can add those inside of it as well. You are now able to deduct up to $40,000 of those taxes. Now, for many of you that have been listening to my other videos here on the OBBBA, this is going to follow a similar suit in where I've talked about how they give you some things, but then they kind of take it away. Well, this one is no exception to that. So this deduction, this increased deduction, starts phasing out if you make more than $400,000 if you're single, or $800,000 if you're married, filing jointly. Now, for many of you listening, you're like, well, that's never going to happen for me, or that's much higher than what I have to worry about. But where you're seeing is individuals that are paying that much in state income taxes are likely in those brackets anyway. So this is a little bit of a, here you go, take it away deduction, because if you're going to really benefit from that $40,000 cap, you're likely going to phase out anyway because your income is high enough that you're actually paying that amount of taxes. Now, don't get me wrong, I'm going to take this deduction if it applies for the circumstances where it does, but it's not one that you should necessarily run home and get really, really excited about either. Again, we're going to take it, we're going to talk about your particular circumstance of why it may or may not apply and apply it for you, but it's one that you don't necessarily have to jump up and down and get really excited about. In fact, if we're doing tax planning, I'll probably talk about it with you, just to see if we think it's going to make a difference for you or not. For most Americans, that increased standard deduction anyway is what they're going to utilize to begin with. For those that this probably would really benefit for, that are in the really high net earning brackets, are going to phase out. And so there is a pretty narrow band of who this is going to actually apply for. But if you're in that band, then great. We're going to take it and we're going to utilize to the extent we can. Now, one little trick here, or tip at least, is if this does apply to you, when you make your fourth quarter state payment makes a difference now. And when you pay your winter property taxes makes a difference now. Because if we're going to have to start using these timing in these deductions, it's actually based on a calendar year and when taxes are paid. So if you recall, your fourth quarter estimate is due in January. but we might want to pay it in December just to make sure we get that deduction. Same for property taxes that aren't technically due until February. We may choose to pay them in the year before, or at least bunch them up. So that age-old adage of bunching deductions, that now applies to you. Again, don't hear me say that every one of you watching this should make sure that you pay attention to that. In fact, most of you aren't going to have to worry about it. But if you do, if you're going to be in the amount where you are going to benefit from that increased deduction, we're going to watch when you make those estimates. If you're working with us for the tax planning, we'll let you know if that's going to apply. So just watch for that and be careful when we're doing our planning for it. So I guess that's going to be another one of my normal plugs. It's kind of starting to sound like a broken record, but tax planning is key. Knowing if whether this applies to you or not is going to be key. It's something that we can work through. We're starting to incorporate all of these new deductions into our fall planning here. So if we haven't met to do your specific planning, please let us know, because we're definitely going to want to make sure that we've thought through these things of what will or won't apply for you on all the things that are OBBA. So give us a call, talk to Lori at the front desk, get something scheduled, and I look forward to talking to you yet this year. Thanks.